If you have a limited company or you're thinking to open one limited company in UK, then please watch this video. Hi, this is Gagan from One-to-One Accountants. My mission is to empower individuals and businesses with knowledge and service to help them achieve their financial goals. Today, we'll talk about everything you need to know about limited company. In this video, we'll discuss about the following topics. What is limited company? Who are the shareholders and directors of the company? What are filing requirements? What are filing and tax deadlines? What other registrations required with the limited company? How profits are taxed in limited company? How directors and shareholders extract profit? Taxes applicable to director and shareholder when they withdraw the dividends. So we'll cover each topic one by one in this video. What is limited company? Limited company is a legal entity on its own, which means that company can buy assets and take loans or liabilities in its own name independently. Company can also open its own bank account in its own name. Company can trade and sign contracts in its own name. So it's a legal person. If we just talk about a simple term, we can also call a limited company as a legal person. Who are the shareholders and director of the company? Directors are the officers of the company who manage and runs day-to-day business of the company, or who takes day-to-day decisions of the company. Those are the directors of the company. Directors also have a responsibility to file the taxes and reports on time with all the departments like Company House and HMRC. So all these responsibilities are on the shoulders of the director of the company. Likewise, shareholders. Shareholders are the owner of the company. So a person who owns a company through shareholders. So if you are a shareholder of a company, that means you own a company. So director and shareholder can be a same person or can be a different individuals as well. So for example, Mr. Joe Block can be a director and also can be a 100% shareholder of the company. Or in other scenario, Mr. Joe Block can be just a director and Mrs. Joe Block can be a shareholder of the company. Or Mr. and Mrs. Joe Block, they both can be a director, and Mr. and Mrs. Joe Block, they both can be a 50-50 shareholder of the company. They will only become an owner of the company when they own a share through a shareholding. So just to recap, directors are those who manage the business or who are responsible for the company running, and shareholders are the owner of the business. What are the filing requirements of limited company? So company needs to file accounts and other reports to Companies House. They need to file accounts to Company House. They also need to file a confirmation statement to Company House. They also need to file or report to Company House if the register office of the company is changed, a director or shareholder is changed, or any other legal compliant changes are there that need to be reported to Companies House. HMRC also needs some accounts from a company. So you have to file accounts to to HMRC. You have to file a tax return called company tax return, also called CT600, to HMRC with a tax computation. So the three documents you have to file to HMRC, which is full accounts, corporation tax return, also known as CT600, and a tax computation. These three need to be filed to HMRC, and Company House expect on a yearly basis accounts and a confirmation statements. So these are the few documents which you need to file on a yearly basis. Now let's talk about what are the filing and the deadlines for this filing. So Company House, as we discussed earlier, are expecting accounts which needs to be filed within 9 months of the year end. For example, if your company year end is 31st of March 23, then accounts need to be filed by 31st of December 23 to Companies House, which is 9 months from the year end. And to HMRC give you 12 months from the year end date to file full accounts, corporation tax return, and tax computation. So say in the same example, if your company year end is 31st of March 23, then 31st of March 24, it's the deadline to file accounts, corporation tax return and tax completion to HMRC, which is 12-month window. And corporation tax, when you need to pay a corporation tax need to be paid within 9 months plus 1 day. So let's again understand this with example. Let's say your company year end is 31st of March 23, then 1st of January 24 is the deadline to pay your corporation tax liability. So these are the key deadlines which you need to know if you have a limited company. Now let's talk about what other registrations are required with the company. One is VAT registration. So VAT can be registered voluntary or compulsory. So let's understand first what voluntary is. If your turnover is below £85,000 and still you want to or wish to register your company for a VAT, then it's called a voluntary registration, but it's not compulsory. If your turnover is below 85, then you can choose to register a company for the VAT. If your turnover exceeds £85,000 in any 12-month rolling period, then by law it's compulsory to register a company for VAT within 30 days from the date your company has exceeded the turnover. So VAT, you have a choice, either you do voluntary or compulsory, but once you reaches £85,000 turnover, then it becomes compulsory. You have to have a VAT number. Another one is PAY. If you hire any employee into your business or director wish to take a salary from the limited company, then you need to register for a PAY. PAY is also called a pay as you earn scheme. So company has to register for PAY and then they can hire you as an employee and pay your salary either monthly or weekly, whatever way they wish to do. Likewise, PAY, with the PAY you also have to register for auto enrollment pension. So if you are hiring an employee, then again it's a duty of the employer to offer a pension scheme to the employee. So you need to have a auto enrollment pension scheme register as well. CIS is mostly applicable to a construction industry scheme business. So it's mostly applicable to construction business. So for example, if you have a building company and you build houses, and if you want to hire any subcontractor like painter, decorator, roofer, brickie, these are your subcontractors. So before you can hire them to provide your services, you need to register your company or a business for a CIS contractor registration. So you have to register your company as a contractor and file a monthly contractor return before you can pay the subcontractor. So CIS contractor registration is required if you want to take services of the subcontractor. Likewise, if your company is working as a subcontractor for another big company or another contract where you provide your company provides services to the contractor, then your company needs to register for a CIS subcontractor. So there are two types of registration, contractor and subcontractor depending, and company can also be a subcontractor and a contractor at the same time. So you can be a subcontractor, your company can be a subcontractor for another company. At the same time, you can also hire a subcontractor to do few of the jobs in that subcontract. So at the same time, company can register for contractor and subcontractor or individually depending on the circumstances. So this is just, I'm talking about in a nutshell what are the registrations required. Now we'll talk about profit. If you have a limited company and a company made a profit, the question is always asked by client how we can take the money out of the company or how the profits are taxed. Company pay a corporation tax on the profit the company make. So company made a profit of let's say £10,000, company will pay 19%, which is £1,900 corporation tax. So company pays 19% corporation tax. This rate at the time of recording the video is 19%, but it's going to change from April 23, and so we'll make another video on the new rates. At present it's 19% on the profit the company makes. We'll talk about how director and shareholder can extract profit. This is another question asked by the client, is how we can take money out from the company. So the company can take money out through salaries, director can take money out through salaries, and the shareholders can take money through dividends. So if you take a salary, you are an employee of the company and you are taking a salary, and if you're a shareholder, then you take a dividend from the company. Company can only pay a dividend if they're making profit. If they're making profit after accounting for whatever taxes due on their profit, whatever leftover can be paid as a dividends. So let's talk about again Mr. Joe Block example. If Joe Block is a director and a shareholder of the company, so Joe Block can take a certain amount of money as a salary up to the personal allowances, and rest of the money they can take as a dividends. So they can take salary and dividends. Now we'll talk about a benefit in kind. So a company can also pay certain benefits to their employees, like or to directors, like medical insurance, dental insurance, any car or any use of assets. These are the also ways where company can pay to remunerate to their directors. But again, there is a separate set of tax rule applicable to this benefit in kind. So before you choose to pay any benefit, just discuss with your accountant or take any professional advice on this. But these are the three ways where you can take the money out of the company. Now we'll talk about what taxes are applicable to shareholder on their personal tax return. So if you have taken a dividend out of the company, because when company pays you a dividend, that dividend are not taxed. So a person who is receiving a dividend, which is a shareholder, has to declare that amount into their personal tax return, and they have to pay a tax on that. So they will pay income tax on the dividend they receive. So in the Joe Block example, if Joe Block is getting a dividend from a limited company, he has to pay an income tax on that dividends. So income tax can be the basic rate, higher rate, or additional rate. So whatever rate he is on, he will pay the marginal rate of tax on his dividend income, and dividend income has a separate set of tax rates. I hope you understand. This video I've made just to give you a fair knowledge of what limited company is and what filing requirements and what deadlines are required. Obviously, there are too many other things which need to be discussed in limited company, but I hope this video has given you a fair idea how limited company operates and what profits are taxed and how you can extract profit. And thank you for watching this video. Please don't forget to like, share and subscribe my channel. Thank you.